Okay, we'll invite Sanjay Parekh, founder and CIO of Sohum Asset Managers, to take some questions. Sohum, if you had to crystallize the three disappointment, maybe the three reasons why we've seen the sell-off in the market, what would it be?
No, I think, good morning, Reema. So essentially, I think, the policy was really balanced. I mean, on the positive side, this was really one policy where you see the optimism on growth, the current account, the reserve situation, our CAD positioning, the volatility in currency. So all that is, the PMI manufacturing, PMI services, the capex formation again coming back. So there were a lot of positives on growth and the resilience of growth. And clearly, coming out, what is coming out, the balance sheets of corporates or banks, or even the earlier we saw the fiscal deficit in terms of consolidation and improvement. So all of them are really quite positives. Of course, interest rate cuts are not going to be immediate. The liquidity provision is still tight, and they will be a little balanced because they did mention, the RBI governor did mention that the inflation last year was in the range of 4.3 to 7.2, and while the core inflation has come better, but the food inflation is volatile, which is where they're worried. And even this year, their target is 4.4, while next year also their expectation is 4.5. So they are clearly a little more concerned on inflation sustaining at lower levels. And the RBI governor very clearly explained the uncertainty around inflation and the volatility that which they're worried. And when they are really there at around 4, they may change the stance and cut rates. So those are the areas where I think the markets will have to wait before we can see the liquidity easing and also rate cuts. That's the way we think.
Okay, well, let's see. I guess the RBI governor was quite emphatic in saying that inflation is still above the target zone of the Reserve Bank, and maybe he's not feeling too charitable, at least right now, in offering that, if not a rate cut, but at least, a change in the stance, more liquidity. We'll have to see how that goes. But Sanjay, hi, great to have you on the show. Let me straight away come to banks then. The troubles just don't seem to end. For this sector, there is a chase for deposits, there's a whole crunch on NIMs, and then you keep having a lot of regulatory moves from the Reserve Bank as well. And it's been, I guess, the most disappointing trade of 2024 so far, because we started the year with big expectations on a catch-up trade in large banks. Where are you on this?
Yeah, so yes, you're right. The last year has been, the banking sector has underperformed. We have this conundrum of credit growth being higher than the deposit growth. And there is clearly the liquidity being tight because RBI has an objective around inflation. And, in the real market, the liquidity situation is tight. And hence, there could be a pressure on deposit growth rate and deposit cost. While the commensurate the lending rates will be driven more by competition. But I think, there could be marginal increase in lending rates as well. There could be some more squeeze on margins. So that is one area. But overall, we genuinely believe the positive side of advances growth, the franchise being stronger, the leadership, the valuation, at least, now all of them are very clean in terms of the profitability. So, even if you look at price to book or price earning now that you can, because they're well provided for, they're at 11, 12 times compared to market at 20 times 1 year forward. So I think most of the negatives are in the price. And I genuinely feel that, while the rear view mirror says that they've not done well, but if I see the next 1-2 years, I'm quite positive on Bank Nifty and the financials in overall space.
Sohum, as a CIO, what would be, Sanjay, as the CIO, what would be the call on a company like Trent? After yesterday's big up move post their stellar numbers, you have another 7% gain on the stock today. And this is a stock which is more than doubled in the last 6 months and is trading at valuations which could be closer now to even 100x. Yesterday, Mangalam was telling us it's at 89 times. And today the stock has moved up even more. So how do you approach a stock like, Trent?
Yeah, no, it is phenomenal results, and the whole model has worked very, very well, across the formats, and they have been exceptionally good in delivering growth, and it was shown up even in the yesterday's quarterly results. And you're right that 100x, if you don't own it, just be quiet. You can't do anything about it, given our philosophy of growth at reasonable price. So it's a great stock, but not at great valuation. And hence, we would just be happy about the performance and wait and on the sidelines.
Okay. All right, Sanjay, a short chat today, but thank you for the perspective. Look forward to catching up again soon. Thank you very much. Well, that's a take on the market after the policy, the volatility that has set in. We will take a break on that note, come back on the other side and just go a little more deeper beyond the market as well. There are lots of interesting companies on our radar as well today on the back of numbers. Ashoka Buildcon is going to be the next stock on our radar. We'll talk about the Q3 performance and the outlook for the rest of the year.